This morning I went to the COMEX website and downloaded the silver warehouse report. And what's on it is kind of amazing. I'm not saying it's smoking gun. It's kind of smoking gun. But anyway, I did this report on it. Take a look.
Silver forecast. What the COMEX warehouse report really tells us. This is the COMEX silver warehouse report from today. It's a daily report that shows how much physical silver is sitting inside the official COMEX warehouses. Not paper contracts, not price predictions, actual metal. And before we go any further, this part is important. This information is not speculation, it's not an opinion, and it's not second-hand reporting. This warehouse report comes directly from the COMEX, published by CME Group, the company that operates the silver futures market. Anyone can look this up. It's posted publicly on the CME Group's own website under the Daily Metal Depository Reports. This is their data. Not a forecast, not a theory. Now let's explain what this report actually shows. The report breaks silver into two main categories. First, registered silver. Registered silver is metal that is available right now to be delivered to someone holding a futures contract. Second, eligible silver. Eligible silver is metal that is stored in the warehouse, but is not available for delivery unless the owner chooses to make it available. That difference matters, because the paper price of silver is set in the futures market, and futures contracts can only be settled with registered silver. So when registered silver goes down, the system has less metal available to support paper trading. That's what this report helps us track. Now here's what happened today. About 3.2 million ounces of silver left the COMEX warehouse system. That silver came out of eligible. It did not move into registered. It left the system. The total amount of silver inside COMEX went down. That is the key fact. What does that tell us? It tells us that this silver was not made available to support futures delivery. Instead, the owner chose to remove it. That supports the silver forecast core belief. The paper price of silver does not fully reflect what's happening in the real physical market. On a screen, silver can look calm. It can even move lower. But underneath, physical metal can quietly leave the system. Does this mean silver is gone? No. Does this mean a default is happening tomorrow? Also no. This is not an emergency signal. This is a stress signal. It tells us the system has less flexibility and less cushion than the paper price suggests. Now, very briefly, where might that silver have gone? We don't know exactly. And the report does not tell us. But common possibilities include industrial users taking delivery, long-term investors moving silver into private storage, metal being shipped to foreign markets, or owners simply choosing to hold it outside the futures system. The exact destination is interesting, but it's not the main point. The main point is this: that silver chose to leave instead of staying available to back paper contracts. That weakens the link between paper pricing and physical reality. This does not mean price must move today. Paper markets can ignore physical stress for long periods of time, but when demand shows up or confidence changes, there is less metal available to absorb pressure. That's when moves become faster and more violent. So here's the takeaway. This warehouse report doesn't tell us where silver should trade tomorrow. It tells us something deeper. Physical silver is behaving differently than the paper market assumes, and that gap matters. That's why Silver Forecast focuses on physical signals, real-world behavior, and how silver responds under pressure. Not headlines, not opinions, just the data.